If you'd had a conversation at the start of the year with someone about gold, chances are that you'd have been told that buying it is a bad idea. Somehow, that's a narrative that's gotten quite popular. I've heard people call it a dead asset. And those same people usually say, just invest in the Nifty 50. Equity is the way to go. But look at the year so far, and while the Nifty 50 is up by about 15%, gold has gained twice that amount. Now, don't get me wrong. I'm not saying that you should sell your equity and buy gold. And I'm not asking you to make an investment decision based on what's happened so far this year. What I want to do is to talk to you about the advantages of holding gold. This Dashera, on the first episode of Moneywise, that's what I would like to talk to you about. Joining me today is Harshvardhan Roongta, co-founder, Roongta Securities, and Rajiv Popli, the managing director of the Popli Group. Thank you so much, gentlemen, for joining me. And happy Dashera to you.
Happy Dashera to you too as well.
Okay, so let me start with a conversation about this narrative that has gotten created. And Rajiv, I want to start with Harsh on this because he's been advising people about this for so long. Harsh, we've had conversations over the years where we've spoken about the other end of the spectrum, where we're saying, hold on, don't buy so much gold, maybe buy a little bit of equity. Because of this financialization that has taken place, do you think in certain cases it's gone too far onto the other side?
So, well, Alex, I mean, it's apparent that investors, the retail investor or layman investor, would essentially chase returns. So, any and whichever place possibly gives them higher returns, I mean, you'll see the flow of money going into that direction. As an asset allocation plan, we've been always talking about having an exposure to gold to the extent of 10 to 15%. And that is excluding jewelry. So we're talking about pure investment. I mean, you have it in the form of a product, which could be a coin or a bar or ETFs or fund or in a gold fund or sovereign gold bonds, basically which you would not hesitate to liquidate. So that allocation would be 10 to 15%. But as I said, investors being investors, I mean, we are going to be chasing returns in any product. So if equity markets do well, we will see money flowing into equity markets. If you see that gold will start doing well and equity markets gets volatile, you'll find investors again chasing gold for that matter. However, as I said, I mean, it's prudent to have a good allocation to your portfolio. I mean, because we don't know which asset is going to perform how going further. So if equity, for that instance, has given about 15%, I'm talking about Nifty, has given 15% return, gold has given 30, you don't know what it's going to be like in the next coming year, right?
Yeah.
So allocation to the right asset class based on your goals, time horizon, risk profile is very important. Invariably, gold as a commodity can be in your portfolio at all times to the extent of 10 to 15% for sure.
Okay, fair point. And Harsh has made the point very specifically that this does not include jewelry.
Exactly.
For years, we've been talking about this, Rajiv. It hasn't changed because ultimately, let's face it, people don't go and sell their jewelry unless they're going to buy more. So it's not necessarily an investment. But I want to get something out of the way. A lot of people think about gold prices in India as determined based on demand and supply here. Is that true, or are we complete price takers when it comes to the gold that is sold in the global market?
Yes, Alex. In fact, now past with the open markets and the transparent pricing that works on in the entire industry, we are rupee to rupee with the international market.
Okay.
There's no Indian dominance of price. There's no local market monopolizing of the gold price at all. We are in fact even closer to that with the reduced customs duty.
Which happened, and
which
that's
is
when
the
you saw a
recent
drop.
phenomena.
Yeah.
So we could realize that there's no change, in fact, with the international pricing. There's no premiums that we talk about. We were in the days earlier in late 90s and 2000s where there was a very serious premium on the international gold price, apart from the customs duty we're talking about. Today, we change, in fact, at our stores, we are pegged to the international pricing totally. So we have our own platforms where we disclose the gold prices on a day-to-day basis to the Indian consumers, and they can always recheck it with the international prices and, in fact, with the other jewelry retailers, which is very fair as a offering. The important part is what Harsh was talking about was probably 10 to 15% of the entire industry retail business, which is the investment part of coins, bars, so on to say. The rest is jewelry.
Yeah.
India lives on jewelry, the craftsmanship, the handcraft, laboring that India is proud of in the international market is jewelry.
I love that we're going to have an interesting conversation here. There is going to be proper arguments from both sides. And gentlemen, please don't hesitate to interrupt the other person. It'll be a more engaging conversation. But I take that point. Harsh, you want to come in on this? Because ultimately, while we're speaking to a large group of individuals that will buy into the philosophy that it's not necessarily an investment, let's face it, I'm talking about somebody who helps me cook. Or who helps cook food for me. I know for a fact that she's had financial trouble over the last couple of years, and what has helped her out ultimately is the gold that she had. Girvi rakke, she has borrowed money, she has pawned her jewelry, and she's bought or she's got money. She's paid for her daughter's wedding. She's paid for certain other medical emergencies. That is a reality.
Yeah, absolutely. So, if you look down, go back in history, I mean, gold or jewelry for that matter has been the ownership, the asset of a woman, right? I mean, Stridhan is still considered to be untouchable by the government as well, right? So there is some sense of ownership and emotional connect with the jewelry. Then you have this kind of ancestral jewelry being passed on from one generation to the other. So these are not, just simply commodities or products. There are a lot of emotions that go down from one generation to the other, right? And in bad times, I mean, of course, these can be, put as security and you can raise money. Now look at this segment that you spoke about. There is one segment of, or larger, rather a bigger segment in India, which is not so, up to date, or rather probably so comfortable with equity markets.
Yeah.
Right. For them, gold and all that becomes that source of investment plus the sense of ownership.
Where financialization hasn't caught up yet.
Absolutely. So the larger portion of the Indian population is in that segment.
Yes.
Right. So of course, gold will be one, very precious commodity in their portfolio. And, that is kept for their daughter's wedding, that is kept as the financial security of the women, that is kept as many other things. So let's not take that away. I mean, unfortunately, it's done well for those people who are holding it.
Yes.
Now, I'm not talking about jewelry again, because jewelry resale value may not be as good as it may be if you're holding in the form of coins and bars.
Yeah.
So you need to distinguish between the two, that jewelry is essentially self-consumption.
Yes.
And investment, when you talk about, then the rate, that the percentage growth that we're talking about, 30%, that's essentially pure gold in the form of coins or bars, for that matter.
Yeah.
Jewelry, you may not get that much of appreciation as much as you may have seen otherwise.
And that is a fair point, Rajiv. Come in on this, because ultimately, look, you're in the business of making jewelry. You have to make some money doing it.
Sure.
It is a business.
Sure.
And so therefore, there is a making charge associated with jewelry.
Yes, of course.
Because it's beautiful products that you create.
So the flaunt basically is on the craftsmanship.
Sure.
And that's what you're paying as a premium, which is probably a percentage of the core product value.
How much can it go up to?
So it can range from anywhere from 4 to 5% upwards and go up to even 25 to 30%,
Sure.
depending on the consumption of labor and design element which is incurred and invested into that product category. India primarily is looked up more as bespoke jewelry, each piece being unique, no multiples and no mass manufacturing. That's the Indian USP per se. So there is where the labor incurring is more, because we don't believe in mass produced pieces. So imagine if your wife would go to a wedding and she would see the lady wearing the same necklace on the other side. It'd be pretty embarrassing. So the whole idea is she flaunts her piece of jewelry because she
I'm
feels
going to
that's
have to
unique.
ask her. I'm going to have to ask
Yeah,
her.
but that's typically how it happens, you know. It's like for the men, if I wear the same Louis Vuitton tie and I see you wearing the same one identically, it's pretty embarrassing.
Yeah, you won't do the Spider-Man thing. That
so
only happens in the
exactly.
cartoons.
But
huh?
in jewelry, it's a very conscious decision that I need something unique for myself, and that's where India, prides itself in creating each piece as a unique collection. So when we look at our jewelry stores and our design team, we work on mechanics where we can produce more innovative pieces every time. On my floor, there are rarely any pieces which will be in multiples.
Yeah.
And in fact, it's a demand. Then if we have to put across, I want the same piece repeated again, then it's a situation for my designers to go back and design the same piece again. It's like asking an artist, can you paint it again for me?
Yeah.
Which
And it won't turn out the same.
No, it's not possible because it's hand done. The whole idea is that we incur a lot of attention, design, meticulous workmanship on creating a unique piece.
So, okay, we will circle back to the investment bit, but I'm very curious about this because he's spoken about handcrafted jewelry. And incidentally, we were speaking just before the show, Harsh, and he was talking about how different styles in India actually sought after the around the globe.
Yes.
I'm curious about, and let's not spend too much time on this, but
Sure.
what are the prominent styles and what is the most expensive style in India?
So it won't be region-based, but of course, the workmanship which is required and the fusion which is done is where the part of investment increases. So we've got things from the Far East, which is Kolkata region, the West Bengal region, where we've got typical generations of karigars who've been worked on, and that's the filigree work which comes out from them. There's something which is there in the West, which is the Gujarat segment, which is Rajkot, Ahmedabad segment, which creates certain unique pieces, again, typical to that region and the culture that it comes from. Of course, there's South, which is born with temples and the whole idea of temple jewelry. And then there's North, which is with the Polki and the Kundan jewelry. So these are segments which are coming out of the religion, the community, the cult, and the entire history which is there. And India is proud of it, end of the day. All this is demanded internationally. When I have my stores in Dubai and other places, these are things which are demanded by a region, in fact.
Interesting. Okay, so that's fascinating. I have a follow-up.
Yeah.
You obviously work with a lot of these karigars, and like Harsh pointed out, this is passed on generation to generation. Is it tougher to find them nowadays?
Yes, of course. See, Pople has been is a nearly 100-year-old company. I myself am third generation. So are many of my karigars, the same way. So there have been karigars who worked with my grandfather, my father, and now they're with me. And the generations have passed on. It's getting tougher by obvious reasons that the entire industry per se earns for these karigars, because there's always going to be a scarcity of these karigars. The next generation may not be as comfortable in doing the same karigari work on the thing, and probably they've chosen some other field, or probably the education has taken them elsewhere. This is very natural. It happens in every industry, especially which is handcrafting, and you always had that in many industries like khadi and others, where these things moved away.
And it's indicative of a shift in preference as well. I want to get into that, Harsh, because generationally we've seen a change, right? If, for example, my parents were more comfortable with yellow gold, I have gone and bought white gold for the one piece of jewelry that I had to buy. I had to buy a wedding ring, right? And I bought a white gold ring.
You had to buy.
I had to buy it. I didn't have a choice. But having said that, what I'm trying to get at is that in your experiences, in your conversations, are people more understanding of the fact that when they go and buy jewelry, it is for consumption and for nothing else?
Yes, in fact, we're talking about the next generation now. They moved on from heavy jewelry to even light jewelry now. So now there is another shift that we're seeing, that they don't want to really own a lot of jewelry. The younger generation, I'm talking about the girls and boys who are possibly in their teens or just entering the 20s, that kinds. So they have in fact moved on to further light jewelry, the fancy jewelry, or the lab-grown diamonds, etc. They've moved on to that segment now.
Gen Z and Gen Alpha.
Gen Z and Gen Alpha, yeah. So they moved on to, and with the lab-grown diamonds coming into picture, you can own something which looks very exquisite and at the 1/10 of the cost of a natural diamond. So that is going further down, because now the next Gen Z that we're talking about would want to spend more on experiences. They will possibly spend on high-end mobile phones, but not want to really own very heavy kind of jewelries. Forget traditional and forget the jadaus and the kundans and all those things. We're not talking about those things anymore. So it's more towards the fancy jewelry and more spending towards experiences, traveling across the world, etc.
Rajiv,
I don't buy that at all.
No, but hold on. He said three words that I think jewelers have not been very keen on listening to. Lab-grown diamonds, the traditional jewelers at least. Is that true?
No, not at all. In fact, see, that's a segment that we don't cater to.
Sure.
There's nothing wrong in it, that fact that we don't cater in it. But we understand there's an audience and there's a category of business which happens with lab-grown diamonds, which is nothing wrong about it. End of the day, you can understand is if you're buying a 1-carat lab-grown diamond, you aspire to buy a real one day, which is what we are here for.
Sure.
So when you do that, we'll be there.
But have people moved? Okay, so that's part of it. But the other shift is to studded jewelry.
Yes, of course. So like Harsh spoke about higher or larger pieces of jewelry, they always will be a part of your portfolio. There's no second thought about it. You pick up any wedding, a celebrity wedding or a regular wedding in the family, you always have a bride wearing a large piece of necklace.
Yeah.
Tell me one which she's worn just a chain and said, I'm going for a wedding. Doesn't happen that way. You will always have a portfolio of jewelry And that's typically how a wardrobe is created. So you have a large piece of jewelry, you have something which is worn on regular terms, you have something which is worn daily, which doesn't happen internationally, but in India it still happens. You have ladies wearing jewelry on a day-to-day basis, which is very important. So that's a very serious quantity of inventory that you're holding. Yes, there is a maturity level which is happening, which is very good for the industry, that people are looking at larger diamonds, larger pieces, not necessarily which are conspicuous, but inconspicuous pieces holding higher value. That's the maturity of the market which happens, and this is what India is proud of today.
And part of that is also, and I'll come to you on this as well, because Rajiv was pointing out just before we started this conversation that people are buying jewelry for themselves more so, and this is a trend that emerged post-COVID-19.
That's right.
And they're buying bigger jewelry.
They're buying, it's self-gifting, that's what we call it.
Right.
So when you go for self-gifting, you buy good designer pieces, you buy good quality pieces, good durable pieces, which you can wear regularly and flaunt it on as and when you want it. And that's what is growing as a larger market for us in the jewelry segment. So there are ladies who are going for just a set of bangles, which you can wear probably daily, and that's of good quality, good design, and they don't mind investing in it. So it's gone are those days where you want lightweight jewelry or you want inexpensive jewelry for gifting and things like that. Now it's I want it for myself. I want to enjoy it for today, and I want it for my use, not for my daughter. When she grows up, we'll buy another set probably, but now enjoy myself.
That's interesting perspective. What do you glean from that?
So in fact, this is to a very great extent true, because there was one segment of people during COVID as well was not suffering as much as the other, the lower income families would possibly suffer. And on the contrary, there were no holidays to take, there were no expensive purchases to do. So they had enough of accumulated wealth in that context left, which was not spent. So it was more like a revenge shopping the moment things opened up. It was like, you had some surpluses left, which was not spent on holidays for the last 2 to 3 years. And that you would might as well spend on yourself. There's another change in mindset saying that, while we saved so much for the future, who knows what holds in the future, right? Something like this could just bring the entire world to a grinding halt overnight to say that, okay, everything just shuts down, right? So why not just spend and, enjoy yourself for the day to day? So yes, this has happened where people would want to spend something on themselves, and gifting, of course, is going to be as per the budget.
Sure.
Yeah, but buying for yourself for self-consumption, if you have the liquidity and markets have supported post-COVID, I mean, you see the kind of wealth that possibly people would have created post-COVID in the equity markets itself. I mean, that money needs to go somewhere, right?
It does. Let's talk about that, and let's circle back. That segue is perfect because we're talking about investments, and look, let's face it, ultimately you're talking about digitization of gold, and that has helped people create wealth as well. And consumption has its place. But let's talk about investment in gold. You mentioned 10 to 15%, but there are multiple ways in which you can hold this digital gold. Sovereign gold bonds are not being issued as much nowadays for various reasons, but if you have the opportunity, should you buy it in the secondary market or should you go for an ETF? What are the advantages?
So the best form of investing into gold would be sovereign gold bonds. I mean,
if it's
undoubtedly.
available.
So they're listed on the exchanges. So in fact, on the flip side, I mean, there could be an advantage to buy on the exchange because you may quote a lower price than the ongoing gold price. And if somebody is so desperate to sell, I mean, you may be the only buyer that he finds. So if the gold going prices are, say, 77,000, for example, you may just quote 75,000 and put a bid over there to say that, look, I'm willing to buy this particular series of SGB at a price of 75,000. I mean, if there's no other buyer and the seller is desperate for liquidity, the only option is for him is to sell it to you. So you could.
And a quick clarification, we'll talk about the taxability of all of this, but a clarification on this. If you buy the sovereign gold bond in the secondary market, and if, say, for example, you have 5 years of residual maturity, because these are 8-year bonds, and they become tax-free only after those 8 years, if you've held for the entire period, you can, you can have a, what do you call
redemption,
it? Redemption after 5 years.
That's correct.
But then it becomes taxable. But what is the taxability if you buy it in the secondary market for the person who buys it?
So for individuals, okay, so first is if you're applying in the primary issue, like you make an application, you get the sovereign gold bonds in your account, and then you hold on till maturity. For individual is tax exempt, as you rightly said. Now, hypothetically, I go to the secondary market and I'm acquiring the units, I'm acquiring the SGB from the stock exchange. It's a resale, somebody else is selling and I'm buying it. If I hold that till maturity also, and I redeem it at the time of maturity, that is tax free for me again. Now there is one area which there is a not enough clarity, but however, because the Income Tax Act very clearly only states that if you're redeeming, not selling, okay, if you're redeeming your SGB, it is tax exempt.
Okay.
So which means that you don't need to necessarily hold on till maturity as well. Post 5 years, when RBI opens the window semi-annually to acquire back the, you can give your SGBs back, the units back to the RBI. It implies to say that even if that point in time you're redeeming, not necessarily till 8 years, but it could be in the 7th year or the 6th year for that matter.
Yeah.
Even then it is supposed to be tax exempt, but there is not enough clarity on this.
From what I have read, it's very clear in the way that it is described. When the product was launched, it was very clear. After 5 years, it becomes redeemable, but it's only tax exempt if, or capital gains is only exempt if you hold it for the 8-year period. That's pretty clear. But okay, let's talk about a couple more aspects, and we'll get into the physical gold as well. But you were talking about if you can buy it in the secondary market, SGB is the best. Should you also consider looking at ETFs, and the taxation of that has also changed?
Correct. So there are other ways of owning it. So if in case you're not comfortable with SGB, because again the problem is that if you bought it and then you want to sell it again, and if you don't find a buyer, then again you will have to give it a discount.
Liquidity is a problem.
Liquidity could be a discount, could be a problem, because though they're listed on exchanges, there are not enough transactions happening. So that's why the price discovery mechanism is not as transparent. So there are other options available to you. One is that you go to a gold fund, like how you invest in gold mutual funds. I mean, any mutual fund for that matter. You could buy a gold fund. So that's like the day-end NAV. You will get the NAV and you buy and sell at that NAV. So you're not again, dependent on market forces for the price discovery. You have gold ETF as an option. So like you buy shares, you just simply go onto the exchange and buy the gold ETF, and that will come into your demat account. So again, when you're buying and selling, that will be dependent on the buying and selling bid that is being done on the stock exchanges. So yes, there are a couple of ways that you can own gold if it's not necessarily need to be in the physical form. Now, from a taxation standpoint, I mean, if you're investing into gold funds, then of course it's going to be the 2 years is the holding period. And if you're selling it before 2 years, whatever gains you make is going to be added into and you have to pay tax as per your tax slab. If it's more than 2 years, then it is 12.5%. The same thing for gold ETF, the holding period reduces to 1 year because it's a listed security. So gold ETF, your short-term capital gains will be for a holding period up to 1 year. And post 1 year, it is going to be 12.5%, the long-term capital gains.
And that's quite an interesting change. We will circle back to that in just a bit. But physical gold, it's mired in a lot of things that not necessarily are the best practices, of course. But then in ideal situation, when somebody comes to you and sells their gold, there is a record of it. Usually they're buying gold against gold, right? But there is a capital gains that is due there as well.
There is, of course, capital gains are applicable as government also has announced in the last budget. But what's important is that the whole trading in gold, even if it's a coin or anything, like Harsh just mentioned about a discounting, which was 3.5 to 4% as a normal practice, I believe. In gold, that doesn't happen. If you would buy a slab of gold, you can walk down 3 jewelers and get the best price and walk home with the money. Obviously, it's official, it's transparent, and it's documented. It's needless to say, it depends as to how you transact end of the day, but that's the norm. So what you value that you get as a consumer, even for the 10 grams of gold that you actually sold on the floor, is very clear and transparent. When you feel you have the correct price for the entire product end of the day.
Do most people come into the store to buy gold against gold, or do they actually sell and take cash?
So there is a very small percentage which is for encashing, unless one has to purchase probably a property or there's some severe situation in the family which is either health or financial. Then there's an encashment. But not out of fancy that I want to simply sell out my gold today and encash it and enjoy it. No, that doesn't happen in literal sense.
And then the percentage of people that buy bullion in the form of either gold or in a coin or bar?
So overall, you can say is around 10 to 12% of retail business which happens on investment products, which is coins and bullion and things like that. And again, moreover, on occasions like Dasera and Diwali that we have is when people end up buying auspicious purchases, which if they don't know what they want to buy and they are skeptical about some element of design that they're not sure about today, they'll end up buying a gold coin and probably trade that back whenever they feel of buying a piece of jewelry.
Best practice here, and this is more or less rounding up the conversation because I think we've covered most of the bases. When you are selling physical gold, the onus of paying the capital gains is on you. I think to a certain extent, the government has been a little lenient on this front for quite a while. But things are changing. Annual income statement captures quite a bit that it didn't in the past, or the income tax department didn't in the past. What advice would you give to people when it comes to managing their tax aspect when they're buying and selling gold?
It's always better to disclose everything because, ultimately the peace of mind that you have, it doesn't compare with any money that you save by hiding or, evading taxes. So the best practices, if you ask me, it's just simply put everything on record because your data is getting captured.
And what's the tax treatment on physical gold?
It's the same. You need to hold for 2 years.
Yeah.
And if you sell before 2 years, then it is short-term capital gains and long-term is
slab rate.
12.5%. Slab rate is short-term capital gains and long-term is 12.5%. The holding period being 2 years.
Okay.
So, if you have to pay, say, 12.5% tax, I guess, it's a good price to pay for peace of mind. The kind of data that is being shared and, because Rajiv will concur that when you're transacting, if the value goes beyond 2 lakhs, right? If the value is beyond 2 lakhs, PAN becomes compulsory.
For purchase of jewelry.
Purchase of jewelry.
But on selling, the jeweler will even transact 20,000 rupees by check.
Check, yeah. So that's
all the more reason.
That's all the more reason.
Yeah.
So while you're purchasing, if you're buying something worth more than 2 lakhs, then PAN is compulsory. If you're selling, the jeweler is anyways going to give you back a check. So that's
exactly.
So it is going on record in any case.
Precisely.
So I guess the peace of mind that you get by paying that kind of tax, I don't think there's any monetary benefit that you can compare with the peace of mind and sleeping peacefully at night. So and the data is anyways getting captured. So why would you not want to disclose everything?
Okay.
Honestly?
So I think that we've covered all of the bases. Of course, if you've got questions on gold, don't hesitate to write in to us. On that note, Harsh as well as Rajiv, thank you so much for joining in.
Pleasure.
Once again, happy Dussehra to you and to your families. And to you tuning in, hopefully this Moneywise episode has been beneficial to you. If you have found it useful, let us know in the comment section and don't forget to share. In the meanwhile, happy Dussehra to you and your family. Thanks so much for watching.